HIMS is down another 18% in after-hours trading after the company announced its fourth quarter 2024 results. So needless to say, the market was expecting more, and it wasn't too impressed with this company's fourth quarter results. So what I want to do in today's video is go through HIMS' fourth quarter earnings results and tell you guys what I think. And I'm going to be going through the good and the bad that I found. I like to think that I am a pretty rational and objective investor, and I think that in this video, well, hopefully you are going to see that as well. So with that being said, let's hop into the earnings results. And as always, I went through them and I took screenshots of the most important things that I found. So right away, we can see that revenue came in at $481 million, which was up 95% year over year, which is, it's just insane growth. Now for the full year, HIMS reported revenue of $1.5 billion, which is up 69% year over year. Adjusted EBITDA came in at $54 million for the quarter and $177 million for the full year. Now what's interesting is operating cash flow came in at $86 million and $251 million for the full year. And why this is interesting, and you should keep note of this, is that HIMS's cash flow is above the adjusted EBITDA, and it is consistently above the adjusted EBITDA as well. Free cash flow was $60 million for the quarter and $200 million for the year though, and free cash flow did drop quarter over quarter because they did have an increase in capital expenditures, and HIMS did announce that they are going through a little bit of a higher CapEx cycle right now, and they did increase their marketing expense in the fourth quarter, which they also let investors know was going to happen, so I'm not surprised to see that free cash flow did drop quarter over quarter. Moving on to the next screenshot, this one shows us HIMS's share of observed total customers, and as of the end of 2024, they estimate that they have 47.3% market share now, and the second closest competitor is Roman Health Ventures with 15.4%, or this is also known as the company Row, which I think is HIMS' #1 competitor, and they're actually copying a lot of HIMS marketing in my opinion. But regardless, HIMS believes that they have 47.3% market share, and their market share is continuing to grow on a total basis. Share of observed total sales is 47.5%, and Roman, which is second, does have 13.5%. Now, overall, I love to see that HIMS has a large and growing market share. Moving on to the next screenshot, this one is the Q1 2025 guidance and the outlook for the full year of 2025. So in the first quarter, HIMS is expecting revenue of about $530 million, which would be a year-over-year growth rate of about 90%. So they are expecting a very strong first quarter in 2025 as well. However, for the full year of 2025, they are expecting revenue of about $2.35 billion, which is growth of about 60%. Now, on its own, 60% revenue growth is still very strong. So the company is expecting a significant amount of growth in 2025. However, what is bearish is the growth rates are projected to drop dramatically from the first quarter throughout the remainder of the year. So we're going to see a very strong Q1, and then we're probably going to see growth rates start to taper down in the second quarter. And the reason for this is because semaglutide was officially removed from the FDA's shortage list, which is the GLP-1 drug that HIMS compounds. We just did a whole video on this on my channel. It's literally my most recent video, so I would recommend going and watching that. And in the conference call, HIMS said that they're not expecting any semaglutide sales after the first quarter in these projections. So they're literally projecting 0 semaglutide sales in the numbers that you're seeing on your screen right here. Now, why I think that this is actually bullish for HIMS is because they are still going to be able to sell semaglutide, at least in some effect, in 2025, even after the FDA shortage goes through. So I think that they're kind of sandbagging their guidance a little bit right here. And in my HIMS deep dive that I did for my Patreon members, which is a 2.5-hour video, by the way, that goes through everything with HIMS, I did a ridiculous amount of research. And if you want that video, check out my Patreon link in the description. But in that video, I highlighted that every single year that HIMS has been a public company, they have beat their guidance by quite a bit. So what they tend to do is sandbag their guidance, which means they like to under-promise, over-deliver, or their initial guidance for the year is usually on the low end of what they actually think that they can do. So just based on the company's history, I think that they could outperform this 60% revenue growth in 2025, which is still a lot of revenue growth, but yeah, we're just going to have to see what ends up playing out. But logically, it also makes sense that they would beat this guidance because, again, they're putting 0 semaglutide revenue in this guidance after Q1, whereas I do think that they're actually going to continue selling, and they also said they believe that they will in some effect. Now, also, we have adjusted EBITDA guidance for the full year of $270 to $320 million, which is basically 300 million, around 300 million in the mid-range right there. Now remember in the first screenshot that we went through how HIMS adjusted EBITDA is routinely below its operating and free cash flow. So this actually suggests that HIMS could produce well above $300 million in free cash flow in the year of 2025. Now they also say right here that they're expecting weight loss revenue of at least $725 million in 2025. And then they say, our expectation is that weight loss offerings such as our oral solutions, liraglutide, and personalized semaglutide will contribute at least $725 million in revenue in 2025. Even in light of this momentum, we believe that offerings other than weight loss will continue to comprise the majority of our revenue in 2025 and be critical to our long-term success. Now, I think that the market initially saw this and took it as a bearish point. However, I don't think that this is very bearish because, again, they said that this projection right here factors in $0 in revenue from semaglutide after Q1. But when I was on Twitter and looking on social media, people kind of got this wrong. And they thought that this projection right here was assuming that HIMS was going to continue selling GLPs for the remainder of 2025, which is actually not going to be the case. So I think that the market may be getting this a little bit wrong right now, and we're going to have to see how this ends up playing out. But moving on to the next screenshot, this one is the subscriber and revenue growth. And we can see that subscribers grew 45% year over year. And here we can see that subscribers grew 45% year over year to 2.2 million. So HIMS subscriber base is continuing to grow very well. And then as we saw, HIMS revenue grew by 95% year over year for the fourth quarter and actually accelerated in the fourth quarter as well. This next screenshot shows us that repeat customer online revenue is continuing to compound at around 70% growth rates. Now, why I like this is because it means that HIMS existing customers are continuing to spend more and more on the HIMS platform. So their existing customers are continuing to still grow revenue. And it also suggests that when they bring in new subscribers, they can continue to get growth from those existing subscribers over the coming years, even going forward. So I really like to see this, and I think that this is a bullish point as well. Moving on, this next screenshot talks about the margins. And here we can see that gross margin decreased approximately 600 basis points year over year to 77% in the fourth quarter. This is another bearish point right here, and I think that the market really did not like that the gross margin declined by 6% on a year-over-year basis. HIMS says the decline was primarily the result of higher costs related to the addition of new weight loss offerings, which were strategically priced to attract new customers and was partially offset by ongoing benefits from economies of scale, in part due to increased volume at our affiliated pharmacies. So basically what HIMS is saying right here is their gross margin declined so much year over year because they were offering sales on their GLP-1 drugs. And in the fourth quarter, they were also doing a massive marketing push. So I do kind of understand this, and this did in fact grow the revenue, and we saw revenue reaccelerate to growing 95% year over year. So I think that the marketing or the gross margin sacrifice this quarter did pay off. So I don't actually see this as much of a negative thing. And I think that the company's margins will expand over the coming years. And they actually said that by the second quarter of 2025 in the transcript, that margins will reaccelerate and expand back to where they were prior. But the first quarter is also going to be another quarter of heavy investment for the company. So I'm not expecting a lot of profits in the first quarter or for margins to expand in the first quarter. And if you're an investor, you should not either. You should listen to the transcripts and actually read this stuff, because it was clear that their margin was going to be compressed in the fourth quarter as well. And it's going to happen again in the first quarter, so don't be surprised by it. And in the second quarter, that's when they're going to get out of their little investment cycle that they're in, and margins should expand again. Now, one thing that is good is the marketing expense as a percentage of revenue declined to 46% in the fourth quarter versus 51% in the fourth quarter of 2023. And the reason that I like to see this is because HIMS by 2030 said that their marketing expense as a percentage of revenue is projected to be between 35 and 40%. So the marketing expense is going to continue lowering over time. And the reason that this is a good thing is because this is the number one expense for the business by far. Now, let's go to the next screenshot, because I personally believe that the marketing expense is paying off. So I actually want HIMS to plow as much money as they possibly can into marketing. Because take a look at this. They spent $113 million in marketing in the first quarter of 2024. And the cumulative gross profits that they got from this cohort from that marketing was $156 million in gross profits. So they spent $113 million, and over the next year, they produced $156 million in gross profits on that marketing expense. So they're getting their marketing expense back within 1 year. This is very effective marketing. This is a very high return on invested capital. So again, while the company can get this high of returns on its marketing expense, I personally believe that they should continue plowing as much money as they possibly can into marketing. However, their 2030 goal is to get their marketing expense down to 35%, which would actually boost their free cash flow margin by 11% from what it is today. Because again, marketing is 46%. And by simply reducing their marketing expense, that should go directly to the bottom line and boost free cash flow. So the free cash flow potential of HIMS business is very strong, in my opinion. And I see a very clear path for this company to become extremely profitable as it matures and it's not investing so much money into growth. I mean, guys, it grew revenue at 95%. That's pretty ridiculous. So let's continue on and take a look at the cash flow now. So last quarter in Q3, they produced $85 million in operating cash flow. This grew basically negligibly to 86 million in this quarter, basically flat quarter over quarter. However, free cash flow did decline to 60 million versus 79 million last quarter due to them going through a little bit of an investment cycle right now. Operating cash flows also did not grow quarter over quarter due to them spending an additional $41 million on inventory, as we're going to see in the cash flow statement, and their gross margin declining by, I believe it was about 2% quarter over quarter. So that actually hit the operating cash flow as well. But this company is in a hyper growth phase, so I'm not entirely focused on them producing cash flow for me today. I want them to continue growing the business. That's what they should be doing, and that's what they are doing, in my opinion. All right, now let's move over to the cash flow statement. And right here, we can see that the operating cash flow for the full year came in at 251 million versus 73.5 million last year. So operating cash flows more than tripled year over year. Stock-based compensation did grow by about 50% to 92 million. This I do not absolutely love to see. This is quite a bit of stock-based compensation. However, HIMS operating and free cash flows have grown at a significantly faster rate than stock-based compensation. And if this trend continues, then the stock-based compensation will become a smaller and smaller portion of profits and become less and less relevant. That's kind of my thesis over time. Here we can also see that capital expenditures increased to about 42 million from 17 million last year. And again, they are going through a little bit of a CapEx cycle right now. They also spent $83 million of operating cash flow on buying back shares, and they also increased the cash position of the business organically. So these buybacks did slightly offset the stock-based compensation, but there was still a net dilution this year. Not a lot, but there was some net dilution this year. This is a very good cash flow statement, and overall the company is producing over $200 million in free cash flow for the year of 2024. Free cash flow actually came in on a GAAP basis at $210 million. All right, now let's take a very quick look at the balance sheet here. And we can see that cash and cash equivalents were sitting at 220.5 million, and short-term investments were sitting at basically 80 million. So HIMS has about $310 million of liquid capital on the balance sheet right now, and it has total liabilities of 231 million. So HIMS could pay off all of its liabilities right now if it wanted to, and still have about $80 million left over. So the balance sheet is absolutely pristine. This company is in no financial stress, and it's also producing hundreds of millions of dollars in annual free cash flow now. So no financial risk here, in my opinion, at least for the company going bankrupt or anything like that. I also listened to the full conference call of the earnings, and I took some notes here of just the highlights that I found. So from the transcript, margins are expected to recover in the second half of 2025, as I said. Marketing as a percentage of revenue is expected to drop by 1 to 3% every year to 2030. And this is largely where the expansion of profit margins is going to come from over the next few years. They're also saying more capital will be invested into the business in 2025. Q1 will be a large investment quarter. So again, please do not expect high profits in the first quarter. Q1 margins will also be lower due to this, expecting profit margins to be at least 20% by 2030. And this is the EBITDA margin, by the way, the EBITDA margin that we saw in the first quarter and how we saw that operating cash flow and free cash flow was higher than EBITDA. So by 2030, HIMS could actually have a higher free cash flow margin than 20%. And on a business that has an 80% gross margin, I typically see free cash flow margins anywhere from 25 to 40%, all the way up to 40%. And then the last interesting comment was that the CEO says that he wants to have 10 million subscribers on the platform within 5 to 6 years. That is his goal. So basically, he wants to 5x the business within the next 5 to 6 years. And it's going to be very interesting to see if he can actually achieve that. So now let's head back over to Stock Unlock very quickly. Let's head over to our KPIs tab. And by the way, we just improved our charts. They're freaking beautiful now. And let's take a look at the subscriber growth. And we can see that back in the fourth quarter of 2021, HIMS had about 554,000 subscribers. That number has now 4x'd to 2.23 million subscribers, and it is continuing to grow at a very strong rate. HIMS online revenue is also continuing to grow extremely well, and I think that it's important to just zoom out when you're looking at businesses like this, and you see them dropping literally 20% day after day. HIMS has had 2 days in a row now where it's dropped 20%. So when you zoom out, just look at the business's long-term revenue growth trajectory, okay? Back in the fourth quarter of 2019, it was doing $25 million in revenue. Now, in the most recent quarter, revenue has almost 20x'd to $471 million within about 5 years, okay? This company is absolutely exploding. It's absolutely killing it. And I think that the market just goes through the emotions. You know, I think HIMS probably was overvalued at $73 per share. It got a little bit ahead of itself. People were very euphoric. And then the stock needed to correct. And now we're seeing that correction. And I think that HIMS is coming down to a much more reasonable price. So I think that it's just very important when stocks are being volatile, especially like HIMS, to zoom out and just look back at the fundamentals of the business and just go and look at the actual company and make a decision based on the business, not what the stock price is doing in the short term, and really just focus on the long-term potential of the company as well. And on that note, let's now talk about HIMS valuation today. So in after hours trading with the actual fully diluted shares outstanding, the company is selling right around a $10 billion market cap. I have my notes on the other screen now, and this means that the company is now trading for 40 times trailing 12 months operating cash flow and 50 times trailing 12 months free cash flow on a GAAP basis. Now, in my opinion, I think that the profit potential of this business is significantly higher. As we saw earlier, the company is expecting $2.35 billion in revenue for 2025. And I think that the company could easily achieve a 20% free cash flow margin when it's a more mature business by 2030. So if we apply a 20% free cash flow margin to the 2025 revenue projections, then we get a potential of $470 million in free cash flow. So I think that this is kind of like the more pessimistic end of what the company's profit potential would be in 2025. Because again, I think that their profit margins could actually be well above 20% over the long term. So if HIMS actually can achieve their revenue goals in 2025 and at least hit a 20% profit margin long term, then I think that the profit potential of the business in 2025 could be around 470 million. Now, again, the company is selling for about 10 billion in after hours trading. So if we divide that by the 2025 cash flow potential of the business of 470 million, then it's about 20 times or 21 times cash flows. So I think that there's a strong argument that HIMS is still not that expensive in the market today when you look at it on a cash flow generation ability basis, which, by the way, is what Warren Buffett does. He does not focus on what is the company producing today in terms of literal free cash flow and profits. I've discussed this a lot on my channel. But what he does is he tries to figure out what is the profit potential of the business if it wanted to return all of its cash to me. Then he also thinks about what is the profit potential of the business 10 years out. But I like to just focus on what could the company produce for me today if it wanted to just focus on cash flows. And when I look at HIMS, I believe it's probably somewhere around $500 million on the revenue that it generates, because this is a highly profitable business. It's just investing so much into future growth right now. And those investments are working out and paying off massively. So I think the stock is not looking that expensive in the market today. And I think that if the company can continue to grow revenues at 40, 50, 60% over the next, what would this be, 5 years, then a $10 billion market cap is going to look like a freaking steal, especially if they also expand the margins, which is what they are projecting to do. So I think this company is doing well. I have not bought any more shares. I have not sold a single share yet. And I really don't care about the volatility at all, because I want to try and hold this stock for the longer term and just stick with it as long as the fundamentals continue to improve, because it's just not overvalued in my opinion, and it's growing like a freaking weed. So if the stock wants to bounce around in the meantime, go for it. I'm happy with my allocation. I'm very comfortable with the allocation that I have in my portfolio for HIMS. And I think that my allocation is partly why I just don't really care. Like, it's about 4% of my portfolio today after the drops, and I'm okay with that allocation. Like, it can do whatever it wants. I'm just going to hold on to it. So that's what I'm doing with my HIMS position. That's what I think about the earnings. And just to summarize this video, I have some bearish points and some bullish points here. Let me zoom out a little bit. So the bearish points are that the gross margin did decline quarter over quarter due to the GLP discounts that they were offering. CapEx also increased, which harmed free cash flow. Q1 will be another quarter of investments and lower margins. The second quarter of 2025 revenue will also probably be down as semaglutide comes off of HIMS platform in the first quarter, so that revenue will be missed out in the second quarter, and revenue could probably drop in that quarter as well. Now, the bullish points here are that the company still expects 20% EBITDA margins long term. As we also saw, operating cash flow and free cash flow is consistently above EBITDA. So a 20% free cash flow margin on 2025 revenue projections is $470 million in free cash flow. Operating cash flow and free cash flow margins, I believe, could also be higher in the long term. Non-weight loss revenue growth is projected to be 36% in 2025. So the business's non-weight loss categories are still projected to grow very well in the coming year. Weight loss category looks like it will continue to grow regardless of GLPs. Revenue projections assume semaglutide sales will be $0 after Q1, which I think is false. The oral offering of weight loss is still doing very well, and this is a non-GLP product. Subscriber count grew 45% year over year. The CEO wants 10 million subscribers over the next 5 to 6 years, and every year the company has beat its own guidance. All right, my last bullish point is that now that semaglutide is off of the FDA shortage list, we can move past it and stop viewing HIMS as a GLP-1 company. And now I think that the company can actually be valued and viewed as it actually should be, which is a diversified healthcare company. Those are all my bearish and bullish points. Those are the things that I found with HIMS. I'm going to be holding on to my position. I don't see a lot of red flags here. I think that the company is continuing to execute well. And that's going to wrap up the video for today. So if you did enjoy the video, then as always, please remember to leave a like on it and consider subscribing to my channel. Also, if you do want to see my 2.5-hour deep dive video on HIMS and build your conviction in the company while this stock is down, then I would strongly recommend joining my Patreon. It's only $15 a month, and you'll get multiple deep dives, not just the HIMS one, but multiple stock deep dives, access to my full portfolio, monthly portfolio updates, access to my Discord community, and dozens of other Patreon-only content. My Patreon members have been absolutely loving the Patreon, and I think that you will too. So seriously, go and check it out. But with that being said, thank you all so much again for tuning in. I truly do appreciate it, and I hope to see you all again in my next video.